I tell people trading is an art, not exactly a science. Most traders who try to bring science, like they want, just tell me 1 + 1 = 2.
Yes.
Just tell me when to buy, when to sell. And it's like, this is, it's not an exact science. And so traders who are gamers, I've noticed, tend to do the best, especially with.
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back to Be the Trader, everyone. Today is going to be a special day. I have my man Trading Farmer here today, and if you don't know who he is, don't you worry. We're going to dive deep into his story. We're going to talk about how he found consistency, and I believe, and he might correct me here, in about a year and a half. So, Trading Farmer, welcome to the show, brother.
Thank you for having me on, and hopefully we can get some good stuff for the audience to hear.
Absolutely, man. So, get us started with what got you into this game to begin with?
What got me into trading? Oh, man. I guess a desire not to work, a desire not to be in a cubicle, because that's what my dad ended up doing. And it kind of worked out. I mean, we're living a, decent middle-class life. But, for me, I was like about to graduate college, and I'm like, I do not see myself in the business world. I do not see myself working with other people because my experience in college group projects was I had to do all the work to get, not to say I'm a genius, but it just seemed like I'm working with people with anger issues. And I'm like, so that's a big reason. The second is having worked on the farm, the Trading Farmer and the family farm, I kind of got used to this idea of working for yourself, working on your own terms. Yes, doing a lot of work. Yes, putting in hours, but not for the man, not for you're doing it for yourself. And so I've always had that self-drive. So anyways, I landed on trading, just same as anybody. You hear about the stock market, you hear about day trading, you roll your eyes, you move on, and then I ended up meeting a kid in college. Okay. And again, I already had some trading experience as far as like knowing about day trading. But anyways, he did a presentation on Thinkorswim in our communications class. Okay. This is a big part of why I got into this. I did my presentation on grass-fed beef at the time. I showed him how to make hay. He did his on Thinkorswim. And I said to myself, again, with this idea of I don't want to do the normal garbage, I said, I got to go up and talk to that kid. And I'm an introvert. And I said, I even thought in that moment, I said, this could change my life. Little decisions like this can change your life. So anyways, I go up and I talk to this guy, and he gets me into Thinkorswim. He gets me to download it. Whereas before I'd never had it. I was not motivated to give, he really, called me up, download this. He got me into it. We kind of became friends. Anyways, that got me into it. He also at the time was not profitable. He was just gambling. Okay. But he got me into it. And then that's where I ended up, where he blew up his account. I ended up kind of sticking with it. Now in that period of time, I had a lot of I quit for a little bit. I got back onto it. But that's kind of what set me off on this journey.
What year was that? This roundabout.
That would be like 2018.
Okay.
Late 2018.
And you said you kind of jumped off of it and came back in. Can you explain what you mean by that?
Well, he was not profitable. So
I
got in, and he was showing me the real what he was doing, and we were buying in class and holding, and it was large caps. And so it didn't work out. I ended up just taking my account, buying some penny stock. It went down like 80%. And so that kind of, I was just like, okay, this is not going to work. Okay. But then, free commissions came out. That was like what, 2019? I forgot when it was.
I think it was 2019, 2020. I can't remember. It was Robinhood, right? Robinhood started that.
Well, Robinhood started, but then Thinkorswim followed. And that's what kind of sparked my interest because I was like, oh, okay, now I'm not paying $6.95 a trade. Now I
Oh,
can.
dude, I remember that stuff.
Right.
Yeah.
So that's kind of how I got back into it, and that's when, I landed on, the big gurus of the time. You got
Yep.
Ricky, you got Ross, I don't think Humbled was a thing, and I really don't watch her because I don't learn anything, but there's also, there was Live Traders, who's
Yep. Yep.
also, they were both in Phoenix, Arizona. Live Traders is up the street here, Ricky and Gilbert. So those were kind of like my inspiration to get back into it. Okay.
Yep.
And that's when I, was watching them and watching, their free content, watched Ross a
Yep.
lot and leaned towards that. But I didn't have any success trying to copy what they were doing. And still to this day, I'm not sure, I never found success doing exactly what Ricky was doing or Ross or Live Traders.
Yep.
But definitely was inspired, definitely learned a lot of the psychology, like max loss. It's big. But I didn't find profitability until I basically almost quit. This was after 14 months. And that's when I said, screw it. Okay, I'm going to forget the brackets. I'm going to forget waiting for confirmation. I'm going to forget these limit orders and whatever Ross was doing, first candle to make a new high. And I said, forget it. I'm just going to use market orders. I'm just going to lower my share size real tiny.
Yep.
So there's no emotion, zero emotion. And I'm just going to take a ton of trades. And every time I get into a trade, it's going to be like a short thing, not this buy, set a stop, hold, add. This was just like, screw it. I'm about ready to quit. I just want to try to make $1 a day. And that shift is where I landed onto this hyper scalping style that I, what I started back then. Now to this day, obviously it's 4 years has gone by, so I'm not trading, exactly. But back then it was literally market in on a dip, market out on the pop, or if it didn't go right away, just market out anyways, and just do that over and over, free commissions. And what I found was with the smaller size and the market orders, I was having fun, and there was no fear, and I was actually finding some success because I was able to avoid the big losses. And that's where I finally grabbed a hold of something. Now I still retained like the max loss stuff I learned from the gurus. I still maintained, the whole psychology that I learned from Mark Douglas, right? That was still intact, but it was that trade management style, that psychological change where it was like, I'm just going to take a ton of trades, small size. I'm not going to add. I'm not going to do limit orders. And I'm just going to scalp the range. I'm just going to go for those quick scope dips.
We cover a lot of information on trading here on Be the Trader, but none is more important than the broker you choose to execute your trades. There are many reasons I use Cobra Trading every day, including multiple order routes where I can get fast execution, great availability on locates for hard to borrow stocks, and fantastic customer service. But don't just take my word for it. Both Benzinga and Forbes Advisor have awarded Cobra for best in class for short selling and day trading. Isn't it time you choose a great broker that you'll enjoy working with? Sign up now by using the link below, and Cobra will provide you with free software for an entire month, plus 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show. And would this be like 2020? What is it? What would you say this? 2021?
Yeah, so that would be about 2020. Okay. I started in Simulator 2019, October.
Okay.
April 4th.
Go ahead.
And then October 2019 to April 420, I did Simulator. And then I went real money thinking I was ready. I wasn't ready. And so from April 420 all the way to November of 2020, when I was about ready to quit on November 3rd, trying to do it, what like I talked about, that's when I switched to this basically my last attempt at just staying in the game. I was about ready to quit. I'm like, I'm just going to have fun. And that's what I did.
That's cool, man. What's I have so many things I want to unpack there. The have fun idea, the super small size, but we'll start with what you just said at the beginning. Was I was paper trading first, and then I went to live account, but I wasn't ready. Could you help us understand why you thought you were ready, and then after the fact, why you know you weren't ready?
Well, at the time, I thought I had, a solidified strategy, and really I didn't. Now I had experience and I had kind of this understanding of how these moved, but I didn't have a solid max loss in place. I didn't have a solid trade management approach. It'd be one trade I'm buying and setting the stop. The next trade I'm buying and adding, and then I'm changing my approach. And now what happened right before I sized up was we had about 2-3 weeks of a really hot market. And this is common with a lot of traders. They do really well for 2-3 weeks and they're like, I got it. And come to find out they don't. That's because the market's always changing. So you're doing well, and then you use real money. Your emotions change. 1, 2, the market changes, and things fall apart real quickly. And if you don't have that solidified actual experience and strategy, then I ended up losing $700 in my first 2 days.
Let's talk about that as well. The whole idea that, people go through that. Because I know you also help traders, if I'm correct. And I think when traders go through the process of like having success for 2 weeks, the boom and bust cycle pretty much, and then they like, okay, it's time to size up. How would a trader get out of that cycle whenever, because they're in that right now? They size up, then lose it all, then they go back. But every time they size down, they make money.
So what I do with students is I tell them to pump the brakes, right? This is, they're finding success for 2-3 weeks, and then all of a sudden they're like, all right, time to size up. And I say, no, you're on a good rhythm. This is a hard career. You're on a good rhythm. 2 to 3 weeks may seem like a lot of time. It's not. Let's continue on that good rhythm. Let's not mess with it. You got something going, and let's stay with the current share size, and let's see if you can continue this out for 2 months. I want to see 2 months of consistency. That's still a short period of time, but that's a heck of a lot better than 2 weeks of good. So, and what I find is I keep people suppressed. I keep their expectations suppressed. I slow it down. I say, don't size up. Keep things consistent. Keep things going.
Yep.
And what happens is sometimes the market does shift, and it usually does, and then they fall apart. But because they didn't size up, they didn't, lose $5,000. They're still, they're still in the game. So that's number one. They're still in the game. They didn't blow up their accounts. So that's a disaster averted, number one. Number two, and I just was thinking about it now, I forgot. Number two is the sizing up. It sort of happens naturally when you try to force it. When you're like, okay, I did good on week 1. Now week 2, I'm sizing up, right? Again, you're changing the rhythm, and then people are like, oh, it's different. And then it's like, well, yeah. What I find is keeping them on the good rhythm and get that foundation solid. Get that solid. And what I find is for a lot of traders is they just naturally over time size up. And it's that psychological shift from deciding in your mind a day that you're going to size up versus just letting it happen. It's like going up to a girl and like trying to force the date and trying to force her to like you versus just being yourself and just being natural and just let it come to you.
Yep. That's a good point. And you also said something about you didn't have solid rules, like solid execution rules. One moment you were doing scalping, the next moment you were buying, putting on stop, letting it ride, the next moment. Can you elaborate on what the difference is now? Like what kind of, like versus the rules you had or thought you had then?
So one of the big things is I did not have a consistent approach to share sizing. Okay, so I was just like one day I was using 300 shares, one day, the next day I was using. So I didn't have like a solid set of shares that I was using. I also in my head didn't really have a max loss set. Now I sort of did, I sort of didn't. What was funny was I would tell myself once I become profitable, then I will follow a max loss. For some reason, I said, well, I don't need to follow max loss. I'm still learning how to be profitable. Once I learn to be profitable, then I'll follow max loss. No, max loss is fundamental to being profitable. And I must have been smoking too much weed or something, because in my head at the time, I thought, okay. So what changed was I was about ready to quit. And that's when I said, I have to write down what the heck I'm doing. And then I also switched to saying I'm using 25 shares to 50, and that's it. 25 shares, in, out, get in on the dips. And then what I decided on, forget the limit orders, forget the brackets, forget the stop losses, forget first candle to make a new high, forget adding, forget all that. That's all I learned from all those other gurus. You know, maybe it works for them, and I'm not really seeing it work for a lot of other people. But I said, I'm just going to simplify this. I just need a buy market. I need a sell market. I need lower size. I need to just have fun. This is a video game, and I just need to have fun while also instituting extreme discipline with the max loss.
So naturally, when you say 25, 50 shares, when you first started doing that, are you like more so saying like, I just want to lose $10 per trade or so, and then calculate that? Is that how you did that? Or you just always said, because I'm just curious, because I know some people are thinking, how did he come up with that?
I mean, I came down to a share size that, wasn't like 5 shares, because that was just like too little. And then, 100 shares was like, in my mind, a little too much. So like the 25 is what I landed on. And then sometimes I'd go down to 10. All right. So I'd have my 3 share sizes, 10, 25, 50, mostly using the 25. Now, what I also started to do is be more dynamic with my share size, where if the stock had big spreads, then I'm going to go down to the first level share sizing of 10 shares. And then if it's kind of my go-to price of stock, it's 25 shares, right? And if it's a really, really cheap stock, I would go to 50 shares, or if I was really doing well, I would go to 50 shares. And I just stayed within those 3 share sizing schemes. And that's where I just developed that consistency of not being all over the place with all this. It's just 25 shares, in, out, and just taking a lot of trades instead of the 1 trade a day is the small account way, or less trades, more money. It was just take a ton of trades, because I could have, and with that share sizing, it wasn't maybe lose $20, $30 if I really messed up.
So what did you do after that? You started trading, and there's still some more questions that I'm going to unpack from the previous thing you said, but I have to dive into this real quick. And that is the whole idea of, if you're just trading, how many trades were you taking a day? Like, how many trades would you say? Because then the question is like, how'd you track? How'd you determine, like, because, there's different ways of doing this game. I get it. And, one of the common ones is one you mentioned is like less is more, and, track those trades. And when you execute, you're not tracking, hundreds of trades a day. So what about yourself? How'd you do that?
Well, Trader View. And so with Trader View, you can see how many trades you took. So I was around 50 to 100 trades a day, whereas before I was around 5 to 10 trades a day. And that was one because I had a cash account, and I was running out of cash every day, and I had to split the account in half to trade with the cash. So that was also another liberating thing at the time, was going down to 25 shares. That was also a necessity, because I didn't have the cash to trade unlimited at that time. So I went from being able to do 5, 10 trades a day to now doing 50 to 100, and not really even keeping track. I didn't, because before it was like 5 to 10 trades, and the emphasis was on each trade, which means I had to have good accuracy, which I didn't. Now I lowered the share size. Now I'm taking hundreds of trades. Each trade doesn't have like weight. A significant, it's not it's just tiny base hits, hyper scalping, little base hits, one big win here. And then because of my trade management approach of get in and get out, it wasn't, adding at the highs and holding for the breakout. It wasn't, waiting for a sell confirmation. It was literally look at the price fluctuation of the penny stock, the low float stock. You see a quick dip down, mark it in. And then as you're seeing that movement back up, sell market again. We're not sitting here talking about what's our target. We're not sitting here putting limit orders, guessing where the price is going to go. We're just going to catch this quick pop down or drop down, and then that movement back up, sell. We're not sitting here saying, where's the bid at? Where's the ask at? Okay. It's more so we're seeing that fluctuation and we're just timing it. And then on some days, some stocks, you can do that over and over and the money just comes in. And so that's kind of the change where it was just take a bunch of trades over and over.
So describe your strategy, because I know people are going to be like, what is this guy's strategy? Like, what does he look for? What do you trade specific? What's your go-to on a perfect world? Could you explain that?
Yeah. So, and I have a write up on my website, but low float momentum. Okay. So we're looking for the gappers, the stocks that you would never invest in, but they are super volatile. They just, they're low float gappers. Okay. And one, it's nice because they're cheap. Two, they're volatile. But and then coming back to the whole idea, once the bell rings, I trade market open. We're looking for those price fluctuations. Again, you got to time it up with the pattern, right? You can't be trying to trade the range in a downtrend 5-minute, bear flag. It's got to be, you got to have picking the right stock with the right price action that is strong and that you can scalp and get in and out. And that doesn't happen on every stock. And that's kind of where the trick is. Every stock has its own personality in the low float. So it's like, that's where, the strategy is some days you're buying instantly as the price dips, maybe on a breakout, you buy the quick dip. Some stocks you don't, because the personality of that stock, you don't buy the dip. So the strategy is market orders, dips, taking a lot of trades. And I call it the 50-50.
Is this all long?
Yeah. Well, in theory. Now, recently I've been accidentally going short because I'm overselling. But yeah, it's all long.
It's all long. Okay. Yeah. So do you mind breaking down? It's up to you. It's totally fine. It's all up to you. But do you mind breaking down some of the criteria of what is a good stock to try that type of trading with? Is there like some kind of like thing you need to see or certain actual criteria? Just curious.
Well, low float. So stocks below 20 to 30 million. Okay. Stocks below 10 million are more so prime. Okay. And also they need to be strong. So some stocks are, they open up and then they immediately go straight down. Okay. Yeah. Nowadays I have instituted backside trading. I have brought in that. So like I've evolved from the whole just get in, get out. Okay. Because I've been, doing this a while.
Right.
So now when you ask me, what do I trade almost any low float that is moving. And
so you do short too then?
Not with intention, no.
Okay. Gotcha.
On accident, I have. Sometimes I accidentally go short and I'm like, all right, let's roll with it, boys.
Okay, go ahead. Sorry, I just was curious.
No, yeah. So it's the low float momentum. It's the market orders. It's the dips. It's buying red on the tape and really trying to just get in and out quickly and not sitting there with this whole I'm going to buy and hold for 10 minutes approach, or I'm going to buy until it hits this target. It's a fast pace. You're taking 100, 200 trades a day, and you're just going for little base hits over and over. And, some stocks it doesn't work well on. And that's why I teach people about paying attention to the personality of the stock. How does the bid and the ask behave? How does it behave? Is it all over the place, or are we getting nice fluctuations? And this is what's really nice about the price ladder, which is what I teach off of. And a lot of the people I learn from don't use price ladder, but I like it because I can see visually the price, the bid and the ask move towards the bottom of the screen and then bounce back up. It's that fluctuation. And so you don't get it on every stock, but a lot of these low float stocks, you get a breakout, but they don't just go straight up. They go up to 410 and then they do a quick dip down to 398, hit a market order, get filled at 4, it shoots back up to 412, market out again. Maybe it pops to 440. You don't buy it. You wait for it to go from 440 down to 425, that micro dip in again, and then it pops up a little bit. And a lot of these trades are like 1, 2, 3 seconds long.
Are you using solely are you staring at level 2 time and sales kind of? And what's the ladder, by the way? I'm assuming I know what that is, but I don't know what the ladder is.
Oh, I thought you would know. No, it's
Montage.
do you use Thinkorswim?
I do have Thinkorswim. Yep, I don't use it to execute. So, but you mean time and
Oh,
sales? Is that what you mean?
no. So there's the traditional level 2, which
Okay.
is that box. It's what Ross uses. Okay, it's that box. You got the bid on this side, the ask on this side. And it's just numerical values.
Okay.
The ladder is where you see every individual cent stacked on, and then
Oh,
you
so
see
like just like level 2, the montage, right? Where it's like they're both prices are stacked on both sides, like on DAS. I use DAS.
um, I don't know if DAS has a price ladder because there's a traditional level 2 and then there's a price ladder, which is a level 2. It's just another like format. So
Okay.
I
I'll look
use
it
them
up.
interchange. I use it like when I say I'm watching level 2, I'm watching price ladder, which is
Okay.
level 2. It's just in a different format where you can see the market price, bid, and the ask, and they move up and down on the screen. Whereas level 2, you're like looking at the numerical values
Yep.
to see the fluctuations. I'd have to pull up a picture.
That's okay. I think I understand now. People can look it up, and I'll look it up too, because I just never heard anyone reference the price ladder ever. So
Yeah, it's not common, but I mean, since I've been showing people my strategy, a lot of people are now using it on
yeah.
Thinkorswim, and I like it over the traditional level 2 because you can actually see the fluctuations in price visually. The bid and the ask as green and red highlighted boxes will fluctuate on the ladder because this is a tough question because I've never
That's
had
okay.
to.
That's okay. You know, I will. Here's what we'll do. We'll get a photo of it later and we'll post it, or people can Google it. I mean, I'm gonna look it
Okay.
up. I'm gonna
Yeah,
look it up.
I'm not
So
doing a good job here with explaining.
no, no, it's totally fine. I hit you with the hard one without like sharing screens, so I get it. Now, what I'm curious though is you mentioned it earlier that I started playing like it was a game, like it was fun. I downsized. I was just getting market in, market out, and it became fun again. And it's a game. Can you
Yeah.
explain what you mean by that? Do you still feel that way? Like it's a game, it's fun?
Oh yeah.
Because, and I asked this question because now people are like, well, is this guy, he's listening to, he's gaming or this is gambling. And like, I think trading is gambling. But it's probabilities. But I'm just curious what you mean by it's a game. And do you recommend people feel that way?
Well, to me, I think it's the ultimate video game, especially with the way I trade, the way these hyper scalpers who trade 50-50, the way they trade, which is very fast paced. It's like playing Call of Duty. You got to anticipate the guy coming around the corner. You got to anticipate the dip. You got to anticipate the pop. You got to be quick to sell, quick to exit. And it's not exactly like a video game. This is definitely not exactly like a video game because the emotions, the money, and that. But to me, yeah, I tell a lot of people it's like a video game. I also tell them it's like learning to play an instrument. It's an art. I tell people trading is an art, not exactly a science. Most traders who try to bring science, like they want, just tell me 1 + 1 = 2. Just tell
Yes.
me when to buy, when to sell. And it's like, it's not an exact science. And so traders who are gamers, I've noticed, tend to do the best, especially with the 50-50 hyper scalping approach. So
Cool. No,
to me, it's a video game, but
yeah.
it's today I lost almost $7,000. So it's sometimes a very crappy video game.
Video game. It's a video game that can take it from you.
Oh yeah, yeah.
Yeah,
It consumes your life.
it really can. And what I'm curious about, man, is for anyone who is like looking to start trading, what's a realistic expectation that you wish someone would have told you when you first started?
Realistic expectation. It's going to take a long time, and it's going to take you to hell and back about 1,000 times. And that's really the only way to learn. Luckily I did have the mentors of Ricky, of Ross, Cameron,
Yep.
started in simulator. They said that, they said, go slow. So, I mean, I had at least sought out the right mentors in that regard. Now, the whole trade management style and what I ended up doing was, again, a deviation, what they were doing. But they also didn't grow up with free commission brokers. This hyper scalping approach is relatively new for the vast majority of people because we have free commissions. And, so what a realistic, it's going to take time, a year, 2 years. Just when you think you got it, it slips away and you go through 2 months of hell. And this career has made me cry 2 or 3 times, even after I found profitability. And even today, I didn't cry, but I threw $7,000 out the door needlessly. I'm coming off a 36-day like green streak. I'm up $75,000 on the month, $640,000 on the year, and then over $2 million gross since the beginning of 2021.
Good shit, man.
So putting it into perspective, but still, all these years later, I'm still going to hell and back.
Yes.
And still learning. But that's why it's so important that you learn in a safe environment. Small size, go slow. When you think you're ready to size up, don't size up. Continue on. Keep the rhythm going because turbulence will come.
I love that you just said, man, that you will still face hell and back even after you find what works. Can you explain to people, because some people really have the wrong impression that to make money trading, like you're just always making money every single day, every single trade, like because we're on Twitter, and obviously everyone's on Twitter. We see everyone's wins. That's just normal. Like just Twitter, that's social media. That's what we do. Why would we share all of our losers, right? That's what people do. But yet we still see that and we know that. And then we start to judge ourselves when you're new at trading and you're like, oh man, like I bet Trading Farmer is winning right now and I'm losing every fucking day. Could you share how that never really goes away? You don't lose every day as you get better, but you're still going to face some challenges. It just doesn't go away.
Yeah, it's like I was on that hot streak, and compared to a lot of other traders that are in the community of this hyper scalping 50-50, I was riding high, and I thought I was never going to come down, but I also knew that my day was coming for the emotions to take over, for that snowball to occur where you just take a trade, you lose, you take another trade, you lose, you take another trade, you lose. And, that's kind of the thing you got to accept. It's like being a boxer and expecting never to get hit. Going back to video games, you're always you're never going to just never die. You're going to have bad games, good games. And with the 50-50 approach, I'm only right on average 48% of the time. That means basically 50% of the trades I take, I lose. So you got to be a really good loser. And so it's maybe some people don't understand that, but it's like it's never going to go away. And the same with life, right? You think, oh, once I graduate college, then I'm just going to be happy. There's going to be no issues. And then all of a sudden, your car breaks down, you're broke, you don't have any money. And you're like, okay, once I get my car up and running, it's like, that's just life.
Yep.
And honestly, almost every career except day trading, it's so ingrained into the career where you just when you think you got it mastered is when you get smacked in the face.
Oh man, so true, so true. I know people are probably asking themselves right now, what did you start with in terms of an account? Do you mind sharing that?
Yeah. I think I started with about $5,000-$6,000, and then I got it to about $10,000. Okay, and this was when I was using the cash account. I'd use $5,000 each day, and that's where I started. And that just for the taking 300 shares per trade, because I was trying to make $100 a day, and I was trying to make this work, but I started with 10,000. And then I had 12,000. And then when I switched, and then I was always kind of running out of buying power. But then when I switched to the 25 shares per trade, that's when I basically was able to take unlimited trades. And it wasn't until right when I got some consistency and that light bulb kind of going off in my head, that's when I finally got my last paycheck from the farm. or my most recent, because I worked there every summer. So they finally gave me enough, and I put all my money into my trader account, and it was about $26,000, and that gave me margin, which gave me the ability to take as many trades as I wanted with 1,000 shares, and so yeah. But I started. I'm getting a phone call here, but I started with about 10,000.
Before we start to wrap this up, man, and I just feel like there's so much more we can unpack. But if you could go back in time and you could give yourself some advice to get that light bulb sooner, because you just mentioned too, a light bulb went off and I started to size. What would you tell yourself?
Lower share size. Because like I said, and I didn't make a point of it, but I was trying to make $100 a day. I was trying to start there. I was like, I got to make $100 a day to make this work. I got to make $200 a day. And part of the shift that happened right before I lowered size, or right when I lowered size, changed to just market orders only, in and out, was I just said, I'm going to try to make $1 a day. Because I looked at my metrics for the 14 months I traded. I had gone up 500 back to break even. I've gone up, and it was 2 days before I switched my approach, I had gone all the way back to break even again. And I was down like 50 cents, and I was about ready to quit. And at that day I was like, geez, had I just tried to make $1 a day, I would have made more money. And that kind of comes into that approach, that psychological change where I'm just going to try to make $1 today, small size. I'm going to have fun. I'm going to start actually being serious about this, which is max loss. I'm going to have my rules written down, taped to my desk. So it's start with small size. Don't be afraid. Just try to make $1 a day, and take your rules seriously. And then also, have fun. And for me, that was lowering size.
That's great, man. It's interesting because people are going to hear this like, what's this guy talking about lower size? I want to make money. Like, they just don't understand that until you can deal with your personal psychology and start to see this as something you can do every single day, be consistent on small size, then you can slowly size up. But everyone wants to skip. I was a skipper. I skipped and lost like 6 or 7K in my first like 3 trades.
Oh,
it was the first trades I've ever taken. I was at my job full time, and I was like, I'm going to quit this job. And I went to lunch break. I worked my ass off. I had a great job, and on my lunch break, I lost 6K, and I was like, well, I'm not quitting. I'm not quitting today.
Yeah. Can I have my job back?
Yeah. But look, brother, I appreciate you being here today, Trading Farmer. It was a great conversation. I know people are going to have tons of questions. They want to learn more about you. Could you take a quick moment and let people know where they can learn more?
Yeah, so you can check out my channel, The Trading Farmer, on YouTube. That'd be the best way. Get in there. I have a website. I don't really, I have a course, but I'm not really a course pusher. I'm not like a humble that I'm just like, but anyways, check out The Trading Farmer YouTube. I go live, trade live in the morning. Today was not a good day. I lost $7,000, but usually we have a good time over there. And so if you're serious about it, again, day trading is risky. All right. And go slow, okay? And it's never too late, even for you, to, buckle down, get to that small size, right? It's like when you're producing a car, you're not going to just roll out with a design without testing it small. You're not going to make 1,000 units before you have a proven design. And a lot of people, they don't got proven designs yet. I didn't. I made that mistake, okay? I was able to come around, maybe by the grace of God, I don't know. But I was able to go back to the drawing board, small scale, get that design figured out, and then produce, the 10,000 units.
I could, you know what? Awesome. Thanks, brother. And we'll talk to you again soon, man.
Yeah, thank you.